Ever wondered what financial instruments are and how they work? Well, sit back and relax as we delve into this fascinating world of finance. Financial instruments can be broadly divided into two types: cash instruments and derivative instruments. Cash instruments are those whose values are directly determined by the markets. They can be securities that are readily transferable, such as stocks and bonds. Cash instruments can also take the form of deposits and loans agreed upon by borrowers and lenders. A prime example of a cash instrument is a check, which facilitates the transfer of payment from one bank account to another. On the flip side, we have derivative instruments. The value and characteristics of these instruments are based on their underlying components, such as assets, interest rates, or indices. Consider an equity options contract, say a call option on a particular stock. This option is a derivative as it derives its value from the underlying shares. The call option provides the right, but not the obligation, to purchase shares of the stock at a specified price and by a certain date. As the price of the underlying stock fluctuates, so does the value of the option, albeit not necessarily by the same percentage. Financial instruments can further be categorized according to their asset class, which can be either debt-based or equity-based. Debt-based instruments are essentially loans made by an investor to the owner of the asset. Short-term, debt-based financial instruments last for a year or less and come in forms such as treasury bills and commercial paper. Long-term debt-based financial instruments, on the other hand, last for more than a year and are typically issued as bonds or mortgage-backed securities. Equity-based instruments, however, represent ownership of an asset. Stocks, which can be either common stock or preferred shares, are the most common equity-based financial instruments. ETFs and mutual funds can also fall under this category. We also have foreign exchange instruments, which include derivatives such as forwards, futures, and options on currency pairs, as well as contracts for difference. So there you have it. Financial instruments come in numerous forms and types, but their common characteristic is that they confer a financial obligation or right to the holder. So next time you're navigating the financial world, you'll have a better understanding of the tools at your disposal.